MTN just dropped their earnings report for the first quarter of 2026, and the numbers are hard to ignore. Let me break it down for you. Let's start with the top line. Total revenue for just the first quarter of 2026 came up to 1.498 trillion naira. That is a 41.6% jump compared to the first quarter of 2025. Now, here is the number that really stands out the most. Profit after tax. It rose by 165.9% to 355.5 billion naira in one quarter, and earnings per share jumped 166.1% to 16 naira 95 kobo. The EBITDA margin, which tells you how efficiently this company is converting revenue into actual profit, came in at 55.3%, which is nearly 9% points higher than it did last year in the first quarter of 2025. For better context, a margin above 50% is quite exceptional for a telecoms company, and MTN Nigeria is sitting comfortably above that line at 55.3%. Now, let us talk about what is actually moving the needle. Data is the biggest engine right now. Data revenue grew 56.2% to 827 billion naira, while active data subscribers increased by 9.5% to 55 million subscribers. Also, the average data usage per subscriber rose to 14.3 gigabytes per month. Nigerians are consuming significantly more data, and MTN is right there to capture that demand. And on the cost side, management kept operating expenses growth at just 16.1%, while revenue grew to 41.8%. The gap between revenue growth and cost growth is exactly what creates the margin expansion you're currently seeing on that data right now. Now, there's one major development that you need to know about, which goes beyond the number that you're seeing. MTN Nigeria is separating its fintech business, specifically the Momo Payment Service Bank and Yellow Digital Financial Services, so they are going to become separate standalone entities. And in all this, MTN Group Fintech Holdings is acquiring a 60% stake, while MTN Nigeria retains 40%. Meanwhile, a capital injection of 152.1 billion naira is part of the deal. Basically, what this means for investors is that MTN's balance sheet becomes lighter. Basically, the load they're carrying becomes lighter, and it can now focus its full energy on core connectivity and digital infrastructure while still benefiting from its 40% stake in the other holdings. Two things to keep your eye on going forward as an investor. The first one is their extra time, which is their airtime credit service. Yeah, the same one that was temporarily suspended by the CBN due to their new lending regulations. MTN expects minimal financial impact on this new regulation, but it is worth keeping your eye on for the second quarter of the year, so we'll see how that's performing. And the second thing to keep your eye on is energy prices. Diesel costs alone could shave 1.8 to 2% off the full year EBITDA margins if the energy prices stay elevated, so just keep your eye on that too. But overall, this is a very solid financial statement. Revenue nearly doubled in profit terms year on year. Margins are expanding, debts are being cleaned up, and the fintech is restructuring business positions for long term. So if you hold MTN or you're planning to hold MTN, these financial results give you reason to feel confident. So basically, if you've been watching from the sidelines, this basically gives you the full picture of what the first quarter of the year held for MTN. But remember, this is just educational content and not financial advice. Do your own research. Share this with your investment circle, and don't forget to drop your questions below. And as always, follow me, like, share to anyone who finds this content that covers both the Nigerian and the US stock market. And I'll be seeing you in the next video. Bye-bye.